Hello everybody, this is my trade recap for Friday, October 10th. You're probably seeing this sometime in the following week. But this was the Friday where the market dumped like 500 handles after the President Trump tweet about China dealings. As always, I started out marking levels that I like on the hourly time frame, and then I work my way back and mark a few on the 15-minute. And then we fast forward to New York Open. At this point, I've already taken one trade. You just can't see it yet because I forgot executions were turned off. Here in a minute, I turn them on and you'll be able to see it. But it was a quick long out of that order block on the third. There's a third or fourth candle after the open. Right now, I'm watching this candle close on fair value gap. And the body is going to close below it, which sends a signal to me that price is going to come down probably even lower. And so I take a quick long there. And this is where I realize I don't have any of my executions and things on. I want to take a long if price comes down into this area. That orange bar that I put in there block is for my order blocks. You guys probably know that by now. So I'm a little worried that I've set my entry too low, so right there I moved it up. Price comes down, fills my entry, and get a quick profit. Base hits. So for the day, there's two trades, and for the day, I'm already $210 in profit. And I think price here kind of fast forwards a little bit, and what we're going to see is what I think is a textbook inversion fair value gap setup. So price comes back up into that inverted fair value gap. I did a long back testing case study on inversion fair value gaps, and I even paid like a premium subscription for a indicator someone had made. But it turns out they just show up too much, and they look really good and turn out not to be good, and it's just too hard to tell. The only times they are easy to kind of tell if it's going to be a good quality inversion fair value gap, in my opinion, is what's happening right now with those two wicks. But you got to be really quick to get like just then to have gotten into that as a short after those two wicks. Pretty tricky, but nonetheless, that's what I think they look like when they're really high probability, especially when one's like in this instance, that first candle is a down close and the next one is an up close. Now moving on. Moving on to the next fair value gap. Thinking about taking a short here if price, because price has not yet pulled back up to that fair value gap. Sometimes they visit them right away and then continue on. But that didn't happen here. And I didn't like the timing and how the candle was progressing, so I think I end up closing this. Here in a second, I adjust that fair value gap to be an inversion fair value gap, knowing that sometimes price is fractal, like everybody says, and maybe we're about to get a second inversion fair value set up here that would be worth taking. That's me also wondering, like you saw in my drawings, that price could just go sideways for an hour in this little area. Right here, I've slowed it down. I've slowed the video down so we can kind of see it happening. I like how that candle stopped inside of it, and I got in. I think it's pretty good timing. Got in short, and then closed it for another base hit for, I think it was $75, $55. So yeah, 140, 70, and 55. And that's it. That's all I need. If I could do that every day, or if I could do that, 4 times and only have a daily loss limit once, I'd be ahead, quite a bit ahead, and that's what I'm going for. There's my stop sign to stop trading for the day. Hopefully you guys were not in the market long when that Trump tweet hit the news. But what are you gonna do? There's no way to forecast that kind of stuff. Probably a good reason to have stops. But anyways, hope you had a great weekend and are enjoying the start of your new week. And I'll talk to you next time.
Bass hits, echoes drift where the cosmos sits. Bass hits, groups that float through the starry mist.